What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I am ending the REIT series. This is the final video of this high yield dividend stock, high yield real estate investment trust that I've been buying. I want to conclude it with one that's kind of an underrated high yield real estate investment trust. I'm going to explain to you why I'm buying more. And this has pretty good dividend growth and revenue. It has a high yield, which I like. And I'm going to continue buying unless something drastic happens. So, of course, as you know, this channel is growing like crazy. And you guys are fantastic, as well as my Instagram. My Instagram is getting a lot bigger. And I enjoy posting like Instagram small stories. I'm going to do shorts. I'm excited to do shorts. I'm going to do quick dividend stock analysis videos for you on the short, so make sure you hit that notification bell. And as you know, this is not financial advice for entertainment purposes, only disclaimer in the description. And I just finished my clinical rotation today, one of mine, so I'm wearing my black scrubs. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check this readout right now. And that real estate investment trust is Universal Health Realty Income Trust. UHT is a symbol. Average volume is 49.44K. The market cap is 730.69 million US dollars. Year range is 40.92 to 60.70, way down. Day range is 52.67 to 53.18, and its previous close is 52.80. Now let's check these guys out. The Universal Health Realty Income Trust is a real estate investment trust specializing in healthcare and human service related facilities. The trust commenced operations on December 4th, 1986. The trust has 76 investments in 21 states, including acute care hospitals, medical office buildings, rehabilitation hospitals, subacute facilities, and freestanding emergency departments in child care centers. So let's check these guys out. So as of April 2022, this is their portfolio. UHT properties, 67% is medical office and buildings, 8% behavioral health, 18% acute care hospitals, 3% specialty facilities, 3% ambulatory care, and 1% child care centers. Let's check a little bit more about these guys. And based on their locations, there's a lot of medical office buildings in Nevada. I think I know my geography. Let's hope I do. Right here, you have a lot of Texas, a little bit of California. It looks like, in the Southeast, it's pretty dominant. And honestly, like SEC country, just like, when you think of SEC football, it is just complete SEC country over here, dominated by medical office buildings. And then you have child care centers, it looks like in Pennsylvania. Again, medical office buildings in right here in Michigan. It looks like Maine has one. There's another part of Michigan right there. So that looks pretty decent. There's some ambulatory care in Texas. The acute care hospitals, it looks like it's in South Carolina. So that's very interesting. And specialty facilities. So it's not too bad. So let's check a little bit more about these guys. So here's their revenue. This is in millions US dollars. 2015 it's 63, 2016 67, 2017 72. 2018, 76, 2019, 77, 2020, 78. This is in millions US dollars. And then 2021, 84.19. Let's look a little bit more into these guys. The revenue is always important when it comes to real estate investment trusts. We're going to look quarterly and see how they're doing. So September 2021, net income 5.34 million, operating expense 12.79 million, revenue 21.51 million. December, revenue went up 21.87 million to 8.43% change. Operating expense went up 6.19% to 12.88 million. Net income went up 91.62 million. It was up 1,732.60. Net profit margin was way up. It was at 419 to 1,589.52%. March revenue 24.43 million. That's March 2022. It went up 5.94%. Operating expense 13.58 million is up 9.98%. Net income went up down 3.24%. It was at 5.4 million quarterly. Net profit margin went down 8.68%. It's at 24.10. Then to June 2022, the revenue did go up by 5%. The revenue was 22.52 million. The operating expense 13.67 million. It was at 6.31%. Net income 5.22 million, went down 21.19. Net profit margin went down 24.97. Now let's look at September 2022. The revenue went up 4.60%, and it was at 22.50 million. Operating expense 13.53 million, up 5.78%. Net income 4.85 million, it went down. Net profit margin, it went down 13.28% at 21.55. Now let's check out a few more things before we go over their dividend history. So here's one thing. During the third quarter of 2022 compared to the third quarter of 2021, the FFO decreased $816,000 or 0.6 cents per share. The decrease was due to above mentioned 496,000 or 4% per diluted share decrease in net income experienced during the third quarter compared to the third quarter of 2021. So there's a decrease in depreciation and amortization expense occurred in our consolidated and unconsolidated investments. That's one thing that's really hurt real estate recently, is the depreciation. That hurt me a little bit on Fundrise. But I'm going to continue to own these guys and see what happens with the FFO. And if something drastic happens, I'm going to dump them. Now let's check out their dividend history. Let's start in 2014. It was 63 cents to 64 cents. In 2015, 65 cents. 2016, 17, 66. 2017, it ended at 67 cents. 2018, it ended at 68 cents. 2019, it ended at 69 cents. 2020, it ended at 70 cents. 2021, 71 cents. And the start of it, and at 12/30/2022, it was 72 cents. The payout ratio is 80%. Number of dividend increases in the last 5 years is 10. Now, the dividend growth in REITs sometimes are a little bit slower than dividend stocks. So it's always good to be diversified. Don't have all your eggs in one basket. The dividend growth in 5 years is 1.47%. So I'm not going to buy a lot of REITs as much, but I want these type of REITs to produce enough dividend income so that I can buy other dividend stocks like Starbucks. So if you have one share, you made 286 with the 5.39% dividend yield. This concludes my real estate investment trust series. I hope you guys enjoyed it. It was a very fun adventure to start the REIT series, and I will have another video for you guys tomorrow. You guys take care and have a good one.